Hello friends, my name is Venu. If you are a new viewer, please subscribe to my channel. And today's topic is changes made in ITR 1 for assessment year 2021. Okay. Here, nature of employment, central government, state government, public sector undertaking. Previously, this is only option government is there. Now this year, this bifurcated into central government and state government. This is the change, and this is the main change made in 2020-21 assessment year. Are you filing return of income under 7th proviso to section 139(1) but otherwise not required to furnish return of income? What does it mean? Actually, we need to file the return of income when our taxable income exceeds 2,50,000 only. But in this case, even though we don't have taxable income, if we have any one of these following transactions, we should file ITR 1. What are those transactions? First one, have you deposited amount or aggregate amount exceeding rupees 1 crore in one or more current account during the previous year? If you deposited more than 1 crore in financial year 1920 in one or more current account, not in savings bank account, if it exceeds 1 crore, you should mention yes and mention the amount here. Second one, have you incurred expenditure of amount or aggregate of amount exceeding rupees 2 lakhs for travel to a foreign country for yourself or for any other person? Second one is, if you spend 2 lakhs or more to travel a foreign country for yourself or for any other person, you should mention the amount by saying yes. If you haven't traveled, then say no. Third one, have you incurred expenditure of amount or aggregate of amount exceeding rupees 1 lakh on consumption of electricity during the previous year? The third one is, if you spent more than 1 lakh on consumption of electricity during the previous year 2019-20, you should mention yes and mention the amount here. If no transaction is there, simply say no here itself. Everything will be disabled here. And one more change in this assessment year is here. Whether you have made any investment or deposit payments between 1/4/2020 to 30/6/2020 for the purpose of claiming any deduction under Part B of Chapter 6A. If you have invested any amount during this pandemic from April 1st to 30th June 2020, CBDT allowing deduction in addition to what we have spent in financial year 1920. For this, a separate schedule is there, Schedule DI. Once we go here, see, eligible amount of deduction during financial year 1920, deduction attributable to investment or expenditure made between April 1st to 30th June. 30th June is not elapsed date, so still you have option to spend or option to invest in sections 80C to 80G. All are expenditure based investments. 80C, CCC, CCD1, CCD1B, CCD2, 80D, DD, DDB, E, EE, EEA, EEB, G, GG, GGA, GGC. But here one more important point, these limits are within the limits specified in section 80C. Those are not over the above limits specified in the respective sections. So please remember this. These are the changes made in assessment year 2020-21. Thank you all. Please subscribe, like, comment, share.